traders, Greg here with the market update. Okay, so the big news this week was that we finally navigated and got through the last big risk event for the year, which was US CPI, which was released on Wednesday night. So market was a touch concerned going into trading into it that maybe it might come out above expectations, but that did not happen. The number came out exactly on expectations. So we had headline at 2.7% and core still at 3.3%, and so market rejoiced on that, that they did not have to reprice the Fed meeting on the 18th of December, and so the market still expects that the Fed will cut rates by 25 basis points and give them the Christmas present that they want. So look, equity markets did exactly what equity markets have been doing all year. And we saw equity markets bid and make new record highs for S&P and Nasdaq. So looking forward now, markets really don't have anything to worry about between now and the end of the year, but they also have something to look forward to, and that's the Santa Claus rally. And on average, that generally gives the market an extra 1% on top of gains that they've already made this year. So it looks highly likely that we're going to see these equity markets, S&P, Nasdaq, probably close at the extreme highs for the year, up a good 30%. What a fantastic performance. Okay, so the other big news in the last 24 hours though was here locally in Australia we had Aussie employment data. The market was expecting there for unemployment to marginally go up from 4.1% to 4.2%, but the complete opposite happened yesterday. We actually saw unemployment drop from 4.1 to 3.9%, which was a big shock. Fantastic number, absolutely fantastic number. On Tuesday we had the Reserve Bank of Australia meet. They did not cut rates, but one of the things is that we saw some dovish language from the RBA, where they basically were open now to cutting rates moving forward, but they'll be data dependent. So that number yesterday coming out at 3.9% certainly does not give them any ammunition to cut rates, or the market was starting to think maybe in February that would happen. 100% cannot cut rates on an unemployment rate dropping down to 3.9%. The Aussie dollar did rally. We saw it pop back above 64 cents, traded as high as 64.30. However, one of the big themes overnight was we saw US dollar strength across the board, and that kicked the Aussie back lower, back below 64 cents, and literally closed in the lows of the day around 63.70. So we had a lot of disappointed traders on the Aussie. Obviously, a lot of traders got long post that fantastic jobs number, and now are underwater with the Aussie back below 64 cents. The other big news this week obviously has been gold. The fact that China announced, the news that China was buying gold again after being 6 months on the sidelines. Saw a fantastic rally. Gold traded as high as 27.20 plus. But just like the Aussie, we saw US dollar strength kick in, and that smashed gold back down to 26.80. So I would suggest not fighting this US dollar strength. It's been a very key theme. So certainly, buying US dollars is working. And just on that is that the key takeaway is that US markets, whether it's equity markets or currency markets, the US dollar has been outperforming the rest of the world. You cannot sell the US. I hope you have a fantastic end of the week trading, and we'll catch you with you again soon.